And welcome. This is Mary Ellen McGonagle with your Friday afternoon weekly Edge show for August 18th. Today, as usual, we're going to take a look at the broader markets and see where did we close for the week and what we can anticipate potentially going forward. Also, some of the news that drove the markets lower last week. And then last up, viewer question of the week. And it's all about the signals to be on the lookout for, not only for the broader markets, but for individual stocks that tell you that it has reversed its downtrend. So first up, some of these economic points and news that drove price action last week. And first up, on Wednesday, the Federal Reserve did release their notes from their most recent meeting, and most of the Federal Reserve governors do feel that we need to raise interest rates further in order to get to that target inflation rate of 2%. And that in turn pushed interest rates higher and the broader markets lower. We also did get news from China prior to that their industrial production as well as their retail sales numbers came in below expectations. This brought about fear of a global economic potential slowdown, and it also pushed select industrial as well as energy names lower for the week. We also talking about the yields. We did see that Treasury bond yield continue to raise and go higher. I'll share with you a chart of that. And then also we did get news today that leading indicators fell. However, GDP growth in the U.S. is on track to grow by 5% in the third quarter. So we are still seeing a U.S. economy that is stable and potentially growing, which is good news, but not great news for the prospects of interest rates continuing to rise. Next week, we are going to get flash PMI data. Fed Chair Powell will be speaking at Jackson Hole. That's going to be closely watched. And then also consumer sentiment for August. All of these reports in the past have been market moving. So from here, let's go ahead and take a look at the markets and see where did we close for the week. And here we are with the daily price chart of the S&P 500. A couple of notable items here. First up is that we do still, of course, have a negative RSI. The S&P was down 2.1% for the week. And as it relates to potential support, that next area is 4,300 level. And that is coming up here fairly close. We are only a little bit more than 1.5% away from this key area of potential support. And the stochastics, another momentum indicator down here in negative territory as well. As it relates to any rally attempts, your upside resistance first area is going to be this red 50-day simple moving average. So net, we are remaining in a confirmed downtrend with a negative near-term outlook. Now, moving along, we can take a look at the NASDAQ as well. It did fare worse, a little bit worse than the S&P, again for the second week in a row, and also breaking further below that 50-day simple moving average, negative RSI and stochastics there as well. I talked about interest rates on the rise. I wanted to share with you a very impactful movement that takes place when yields are on the rise, and that's this thin line here taking us back to the end of last year. So you can see as yields were rising, this is the NASDAQ, we do see a pullback, and it's all about the future earnings of these growth stocks are reduced in a rising rate environment. And also back here in December going into this year, a rise in rates pushing the markets down, and then that February to March pullback due to rising rates. Now, what took shape here more recently is rates were continuing to rise June into July, and the markets were looking the other way, and they were all more looking at reduced inflation. And as we can see, that has now caught up. As yields increase, we are seeing that pullback in the NASDAQ. Now from here, I'm going to take us over to the 11 underlying sectors in the S&P 500. This is all about having your arms around where that relative outperformance is taking place. We are seeing nice movement in energy, although energy stocks did get hit with China's news. It was the second best performing sector, down only 1.2%. Here's that news, and then a nice bounce. A lot of these companies are coming out with very good earnings, and we're also seeing elevated oil prices also keeping this group strong. Now, taking a look at this 2-month daily price chart view, you'll be able to see this is that 50-day simple moving average. Only one other group is above this key area of support, and that is healthcare, XLV. We can see that it pulled back. However, it does remain above support with a positive MACD. A lot of these large cap pharma stocks are really helping to keep this particular sector elevated. Other areas are not faring as well. And from here, let's take a look at some of these weaker areas that really got started to the downside prior to some of the others. This is technology sector, and it actually was the best performing last week. It was down only 1.1%. And a lot of that had to do with some sub-industry groupings I'll share with you in the next segment. And also Microsoft and Apple, both heavyweights, were down less than the broader markets. So I'm keeping a close eye on technology as well as subgroupings in there, because this is the area that led the markets lower, and I will be keeping a close eye on a potential at least flattening and then downtrend reversal. And this is what I talked about on that question of the week. Those characteristics needed to signal that a new uptrend has resumed. I will share with you that as we move forward. Also, some of these other areas down here very weak. Consumer discretionary down over 4%. This is all about Tesla lost 11% and Amazon down almost 4%. We can see the deterioration with a move below that 50-day simple moving average on big volume, and that MACD now in negative territory. So certainly growth stocks, certain areas are being hit. We are seeing a number of retail names report here recently, and the results have been mixed at best. So another area that I did want to point out to you that just turned negative this week, XLI breaking below this 50-day simple moving average. I talked about that weakness in China impacting some of these bigger multinational industrial companies, but also Deere came out with their earnings today and not so good. Here we are with DE, a break below that 200-day on very heavy volume with negative momentum there. So from here, I did want to take us beyond these 11 sectors and share with you some sub-industry groupings that are equally helpful as far as staying on top of potential rotation. So first up here in the forefront, we can see the US dollar is continuing to climb higher. This is another negative for those mega cap multinational companies. And also up here at the forefront is that yield on the 10-year treasury. And you can see it remains above that 4% level, which is right here. And that is very critical. We did pull back a little bit today, but we are still elevated close to that 4.3% level, and I shared with you that view as it relates to the growth areas that respond negatively to rising rates. Next up here is volatility, VIX, also known as that fear index, and we can see it got up as high as almost 19%. Anything above 16% generally will be a negative backdrop for the broader markets. So keeping a close eye on this volatility index as well. Now, moving along, I talked about Brent crude pricing did pull back, and this was all about China and global potential contraction that is pulling the price of oil lower, but it is still elevated up at that $84 per barrel level. Looking at this Brent crude oil pricing, you can see the chart is still constructive, that RSI and MACD in positive territory. Some of these other ETFs that are really quite helpful are going to be, for me, with technology, are semiconductor, and then we'll take a look at software. Now, this particular group was down only 1.2%, so definite relative outperformance. The group got a nice boost with the Monday rally, pulled back, and then today was up about 0.5% in an otherwise flat to down market environment. So we can see that semiconductors are negative with that RSI and MACD, but it is an area that I'm keeping a close eye on, again, because it did lead us into a nice uptrend, and ideally we'd like to see a resumption because many of the companies underlying have, by and large, exhibited growth outlooks. So moving along, taking a look at software, I use an ETF IGV, and this was also down less than the markets, 1.5%, and we can see that this RSI is potentially leveling off. We're not quite there yet. This MACD now in negative territory, so the overall trend is down, but we are seeing some bright spots in this grouping. And from here, I did want to share with you a couple of areas in healthcare that are not faring well. First up is IHI. This is the medical devices, the growthier area of that more defensive healthcare area. And you can see it's really gotten walloped, down quite a bit from its August peak in price, and continuing to slide lower. From here, I'll share with you a chart of the IBB Biotech, NASDAQ Biotech ETF, also generally trending lower. However, we did mention earlier that XLV, that healthcare ETF, is holding above that key 50-day simple moving average. Now, from here, I do want to share with you those characteristics that would signal a downtrend reversal. So from here, I'm sharing with you a daily price chart view of the NASDAQ that we looked at earlier, and I've highlighted those characteristics that would signal that this downtrend has in fact reversed. I'm taking us back to the mid area of March of this year, and a couple of items that took place. First up was a move of this index back above its shorter term, in this case 10 and 21 as well as 50-day moving average, and that took place simultaneous with an RSI trending into positive territory, and likewise with the stochastics. And these three characteristics together did in fact signal a new uptrend in the NASDAQ. From here, I'm going to take a look at a view of Microsoft, and Microsoft has been in a very confirmed downtrend since reporting earnings back here at the end of July that were disappointing. You can see the metrics on momentum in negative territory trending downward, high volume on this selling as it broke below key support. Now, in looking for a potential downtrend reversal that would signal an uptrend, I'm taking us back again to mid-March with this chart as well. And we can see same dynamics with the move above the shorter term and 50-day, actually each of its moving averages, nice high volume. And then we also got that move in the MACD black line up through the red, signaling a new uptrend. And then likewise with the MACD entering into positive territory. So that is what we will be on the lookout for with individual stocks as the markets continue to move through this downtrend. That's it for this week. Everyone have a fantastic weekend. I'll look for you here again next Friday afternoon. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.